3.3.2 under audit report, it says refer to points 4 and 5. That's point 4 and 5. Explain 2 examples of ethical responsibilities and audit evidence. Right? Point 4, it says we have fulfilled our ethical responsibilities, which are consistent with international standards. Point 5, the audit evidence obtained is sufficient and appropriate to provide a basis for our opinion. So the 3.3.2, it says explain 2 examples of ethical responsibilities. 2 examples of ethical responsibilities. Like number 1 will be not colluding with directors, and number 2 will be just an honest opinion. Ethical responsibilities, if we have to mention 2, the auditors, they need not to collude with the directors. They need to be as honest as possible. They need to make sure that they are trustworthy. There's so many things you can talk about under ethical responsibilities. But because we are required to only mention 2, I'm thinking of just mentioning these 2, that the auditors need not to collude with the directors, and the auditors need also to be honest when they are presenting their opinion. The audit evidence, there's a lot. It will be, maybe the audit evidence will be source documents. If I'm talking about source documents, I'm referring to things like invoices, the receipts. If they need evidence maybe of money that was received, they may request that we need to submit the receipt book, or for purchases, invoices and all that. So for payments, bank statements, they may also serve as audit evidence. So this is what I'm referring to, like the source documents, maybe the internal control tools, Yes, the audit evidence, they may also be required to provide the internal control tools so that they can see that there is proper internal control in the business which is supporting the financial statement, the tools that are supporting the financial statements, and therefore that will serve as audit evidence. Right, 3.3.3, audit report. Extract from the audit report of Tembiso Ltd are provided. We know the types of audit reports that we are expecting. There is a qualified report, which is not a good report, it's a bad report, because you find that there is 1 or 2 aspects that is questionable in the financial statement. We also have an unqualified report, which is an excellent report. So the company becomes very happy when they receive an unqualified report, because it indicates that everything in the financial statement is in accordance with the Companies Act, and it is in the manner that is required by the international financial reporting standards. There is also an adverse opinion. The adverse opinion is a very bad report, the disclaimer of opinion. There is also a disclaimer of opinion wherein the auditors refuses to give an opinion because they see that everything that is there is not in accordance with what is supposed to be done, and therefore they refuse, or maybe they required an evidence and that was not provided to them, and therefore they are failing to proceed with their audit, and then they decide to issue a disclaimer of opinion, which is a very bad report. So we are now going to read this report which was issued by the auditors and see what is it that, what kind of a report did they issue. So we have an extract here from the audit report of Tembiso Ltd. It says here the information to shareholders. We have audited the financial statements set out on pages 8 to 52. Sometimes in the exam you are asked, why is it important that the auditors need to mention the page numbers? And when you are answering that question, you should be very clear to say that the auditors are only responsible for the pages that they have mentioned, because it can happen that the financial statement, they start from, let's say, from page 1 to 100. But if the auditors have only looked at pages 80 to 58 to 52, then it is important that they need to stipulate that, so that should anything be wrong in the pages that are outside these pages, then they cannot be held responsible for that. So this, and to answer it, to be precise, when you are answering that question which says why do they have to stipulate the page numbers, the answer is that they are only accountable for the pages that they have stipulated. Like in this one, they are only responsible for pages 8 to 52. The opinion, in our opinion, the financial statements present fairly in all material respects the financial position of the company as at 28 February 2018. And point 2, in accordance with the financial reporting standards, in accordance with the International Financial Reporting Standards, IFRS, and the requirements of the Companies Act 71 of 2008 of South Africa. Basis for opinion: we are independent of the company. We have fulfilled our ethical responsibilities, which are consistent with the international standards, and the audit evidence obtained is sufficient and appropriate to provide a basis for our opinion. Point 1, they have said, in our opinion, the financial statement fairly present fairly in all material respects the financial position of the company as at 28 February 2018. And point 2, they are saying, in accordance with the International Financial Reporting Standards and the requirements of the Companies Act 71 of 2000 of South Africa. So this report is a clear report that it is an unqualified report. It's a good report. This is an unqualified audit report, and is a very good report for a company to receive. So this is, so we are required 3.3.1. 3.3.1, we are required to refer to point 1 to 3. 3.3.1, we are required to refer to point 1 to 3. Why did the auditors mention these points? Give one explanation for each point. So let's start with point 1. Good. Why did the auditors mention this point? Let's go again and read point 1. In our opinion, the financial statement presents fairly in all material respects the financial position of the company as at 28 February 2018. So why is it important that they have mentioned this point? They wanted us to know that the company has received an unqualified report. So this point is important because it tells us the type of the report that the company has received. So the company has received an unqualified report. So point 1 is clarifying that. So point 2, let's read point 2 again. Point 2, it says in accordance with the International Financial Reporting Standards and the requirements of the Companies Act. Why is it important that they need to mention this? It is because the companies operate locally and internationally. So the companies operate locally and internationally, so they therefore need to meet international standards. That is why there is IFRS. IFRS is International Financial Reporting Standards. So we are recognizing the fact that the companies, they operate locally. Even the companies may also have shareholders abroad. The company may be in South Africa, but you will find that it has got shareholders abroad. So therefore, we are saying companies operate locally and internationally. So therefore, it is very important that the financial statements of a company needs to meet the international standards. So IFRS must be followed, International Financial Reporting Standard. So this point 2 is clarifying that this company has satisfied the requirements of the International Financial Reporting Standards. So point 3, why did the auditors mention point 3? Point 3. Why did they mention point 3? Let's read point 3. We are independent of the company. Why are they saying this point? So they are mentioning this point so that the public may know that they are giving an unbiased opinion, and that there is no conflict of interest. They are independent they are not related to the company. So it is important that the auditors need to mention this, because we need somebody, when we do audit, we need somebody who is independent of the company. There has to be no relationship between the auditors and the directors, so that we know that the opinion that is going to be given is an unbiased one. So unbiased opinion, and that there is no conflict of interest. So that is why they are mentioning point 3. So that was 3.3.1. 3.3.1, it was saying, refer to points 1 to 3. Why did the auditors mention these points? Give one explanation for each point.